Welcome to Exponential Finance, where we connect AI, cryptocurrencies, and markets to help you understand what matters and how to act each week. Today, we present the weekly analysis of Bitcoin.
Okay, let's just get right to it. After that pretty nasty price drop we just saw, there's really only one question on everyone's mind, right? We're hearing all this chatter, a big shift in sentiment. People are starting to whisper bear market. So, is the bull run actually over? And wow, the headlines were just screaming, weren't they? Bitcoin takes a nosedive below a huge psychological level. And, well, you saw the panic. I mean, even if you've been around for a while, seeing a key support level just crumble like that, it gives you that sinking feeling in your gut. It was a massive, massive psychological test for the entire market.
And this is what that panic looks like in numbers. The Fear and Greed Index, that tool that takes the market's temperature, it absolutely cratered, down to a score of just 23. I mean, that's not just fear, that's extreme fear territory. You could almost feel the panic in the air. So, okay, we've got fear, a lot of it. But the real key here is to dig a little deeper. What's really driving this? What's the market actually thinking, underneath all the scary headlines? Is everyone really heading for the exits? Well, here's where it gets really interesting. Despite that extreme fear reading we just saw, it turns out the market is completely split. I mean, look at this. A poll of 3,500 people asked, hey, is this the bottom? And the result? Pretty much a dead even 50-50 split. Half the people think this is it, the other half, not so much. And you know what? This leads to a classic contrarian idea. There's this old saying, the market never goes where the majority thinks. But what happens when there is no majority? When the market is this divided, there's no consensus, no clear direction, everyone's leaning. And for a contrarian, that can actually be a bullish sign. This level of uncertainty is exactly what they look for. All right, let's peel back another layer. Let's look at the on-chain data to see what's really going on with the coins themselves. And believe me, the story here is fascinating. So get this, the analyst Checkmate pointed out that during that big dip, more than 57% of all the wealth in Bitcoin was technically underwater. Let that sink in. That means over half the network was holding at a loss. That is a staggering number. So why? How did that happen? Well, a big part of the story is that some of the long-term holders, the OGs who've been around forever, they've been selling, taking some profits off the table. And at first glance, that might sound bad, right? The smart money is getting out. But is it really bad news? Actually, it's the complete opposite. Think of it like a changing of the guard. It's incredibly healthy for the network long-term. See, every time an OG sells, a few things happen. First, an old cheap coin gets a new higher price tag, which builds a stronger foundation for the market. Second, it spreads the wealth around. Coins move from a few big whales to lots of smaller holders, which is great for decentralization. And third, it gives new people a chance to become the next generation of long-term holders. Okay, so the on-chain story is actually pretty bullish. It's a healthy transition. But what about the charts? I mean, that drop still felt awful. So let's see if this kind of gut-wrenching volatility is actually normal for a Bitcoin bull run. And here's some much-needed perspective. Yeah, this last drop felt huge, but it was only about a 20% correction. Now, I know that sounds like a lot, but believe it or not, we had an even worse one, a 30% drop, earlier in this same bull run. So when you zoom out, this kind of thing, it's really just business as usual. And check this out. This is the weekly RSI. It's just a simple indicator that tells you if Bitcoin is getting overbought or oversold. And look where it just landed, right around the 44 level. Now, why is that important? Because the last 3 times it hit this exact spot, it marked the bottom right before a pretty big bounce. It's about as classic an oversold signal as you can get. All right, let's put the pieces together. We've got extreme fear in the sentiment, but a totally healthy story on-chain, and technicals that are screaming oversold. So, how do we make sense of all this short-term noise and see the big picture? I love this analogy. Think of the market like the ocean. You've got the waves. That's the day-to-day price action. It's chaotic, unpredictable, driven by fear one minute and FOMO the next. But then, you have the tide. And the tide is the slow, powerful, long-term trend. It's driven by the real fundamentals, the network's growth, and it's incredibly steady. And here's the bottom line. That volatility, all those scary, chaotic waves, that is literally the price you pay. It's the price of admission to get a ticket to ride that powerful rising tide. You just can't have one without the other.
So this all boils down to one simple question you have to ask yourself. What game are you playing? Are you trying to surf those chaotic day-to-day waves, or are you here to ride the long, steady tide? Because knowing the answer to that, well, that changes everything. To learn more and stay up to date with the latest in the world of Bitcoin, visit exponentialtom.com and subscribe to the channel.